Hey everybody, Tim Doehrmann with Eagle Ridge Wealth Advisors back with you today. And today we're going to talk about stock market volatility. You may have noticed a bit of volatility in the stock market recently. And it's times like these that it's important to remember that this is the price that we pay for long-term results. If everything went straight up, markets wouldn't mean anything because there would never be sellers and therefore no markets. Now, on average, stocks experience a pullback or correction in industry lingo of 10% or more at least once per year, which happens even in positive return years. And yes, it seems to happen extremely fast these days. The most important thing to remember is that we are in this for decades, not a week, not a month, not a year, or even a couple of years. We are using the stock market as a tool for retirement. And rather than focusing on the rise and fall of your investments, try to focus on what the purpose of your investment portfolio is actually for. And that purpose is to create an income stream in retirement. It's not simply to run up the proverbial score or see what number of top nest egg that we can hit, right? Or at least for most people. And recall, if you are a client at my firm, you have a war chest of cash and fixed income that acts as a ballast for your investments. So while these investments may not go up as much as growth-oriented investments in a rip-roaring bull market, they provide stability and a means of stable cash for many years, while the growth investments are going to go up and down or bounce around. And while my crystal ball doesn't work all that well, I do know what we need to do over the long haul to get results. And yes, we are always keeping an eye on everything, and we make decisions on what might be best for your specific situation at that time. But the best advice that I can give is to have a plan and to stay the course. Panic is not a plan. Panic is not a strategy. Now, the following message is a great storm analogy from Carl Richards of Behavior Gap. And he says, imagine that it's a very still day and you're in a boat on the ocean. There's no wind, no swell. The water is as flat as a mirror, or glass as it's known to water sports enthusiasts. The calm goes on just long enough to make you feel like it's normal. And then a small wave comes, and it feels huge. And then another, and another. And then you're shocked at how enormous a regular wave feels. And as scary as it might feel, it's important to remember that waves are actually normal. And in fact, occasional storms are normal. And the last thing that you want to do when you get into a storm is abandon ship, right? So let's stay the course, even when the markets might not look so good. And remember, your war chest is built to survive the proverbial storm. Thanks, and I'll talk to you soon. Once again, Tim Doehrmann here, founder of Eagle Ridge Wealth Advisors. And if you would like to see how we help our clients get the most out of their financial lives and retirement, please visit us at erwealth.com, and we hope to see you there.